Welcome to Chart Detective, where we let the charts speak for themselves. In today's presentation, we'll look at silver and we'll do a chart review for the metal starting from 2024 to see what was happening in silver during that year. So we'll look at the chart from June 2020 all the way to December 2024. And these are weekly candles. We can see that silver had been ranging since 2020, anywhere from $18 all the way to about $30. However, during the second half of 2024, silver had a breakout where it went all the way to $35. That was the high for 2024, but that was short-lived because the price went down right after that by roughly about 15%, which has placed silver in correction territory. A correction is anywhere between negative 10% down to less than 20% down. If it was down more than 20%, it would have been a bear market. However, silver was still able to be up by about 24% for the year, almost the same as the S&P 500. Now let's look at the chart for silver for 2024. We'll look for May to December of 2024. And these are weekly candles. These are daily candles. So silver had formed a head and shoulder pattern. So let's take a look at that. This is the formation of the right shoulder, the head, and this is the other shoulder, and this is a neckline. So silver broke through the neckline and went down. So this is the left shoulder, the head, and this is the right shoulder. So this is a classic pattern, very bearish. We see that the price pulled back trying to retest the neckline, which became a resistant line. Now, how do we find the price target? How far we would expect silver to decrease if this pattern was to be successful? In order to do that, we measure from the neckline all the way to the level where the head of the pattern was, and we extrapolate that to the neckline downward, and from there we can see that silver can decline all the way to $26, which would be another 15%. So if this pattern was to be successful, silver should decline by another 15%. And according to research, this pattern is successful between 83 to 93% of the time. So this is a picture of the pattern. Now let's take volume into account because this pattern requires volume to be very active in order for it to be successful. So let's look at some criteria for more bearish sentiment for silver to see if this pattern is likely to happen. So silver is likely to go down another 15%. So we look up a couple books. The first one is by John Murphy, Technical Analysis of the Financial Markets, which is the Bible for technical analysis. And we also look at Bulkowski, where he had done some research about the the head and shoulder pattern as well. So criteria number one, the neckline should be horizontal. There should be higher volume at the left than the right shoulder. Volume should be high when breaking the neckline. And lastly, volume should be lower when we're testing the neckline, when the pullback happens to the neck, back to the neckline. So let's check to see what do we have here. The neckline looks to be horizontal, so criteria number one seems to be fulfilled. Let's look at the volume for the left shoulder. Volume increased, then it decreased. So we could say that volume is somewhat high at the left shoulder. Now let's look at the head. Volume was high, but it decreased at the head. Normally, it says that the volume should be low at the head, but volume is decreasing, so that's a good sign. Then we look at shoulder volume at the right shoulder. Volume seems to be constant there. So volume at the right shoulder when compared to the volume at the right shoulder when compared to the left shoulder seems to be low. So criteria number two is also fulfilled. So far we have the horizontal neckline, and then we also have higher volume at the left shoulder than the right shoulder. We have two more criteria to check. Let's look at the breaking of the neckline. There is a breaking of the neckline, and we see that volume was low, but volume was increasing. So that's a good sign. And at the retesting, when the pullback happened, volume should be low. And what do we see? Volume was decreasing. However, this happened in December, so there were not a lot of trading around December when most institutional traders were not available. They were not trading in the market. So therefore, we could say that this criteria may not be as well as expected because of that. So criteria number three, somewhat fulfilled, as well as criteria number four. So this pattern is likely to happen because most of the criteria that we have been fulfilled. However, in technical analysis, we have to look at both sides. So we look at the bearish movement that may happen. Now let's look at the chart again to see if we could see any bullish sign for silver. Looking at the chart from July, so silver could go up and stop because of resistance at about $30. Price may go down again to $29 and stop there because we have a support line at the trend line. Price would go up from there to $32 because there's a downtrend line that would stop it there. So the resistance becomes support because it's below the price. There would be a pullback to the $30 again, and silver could go up all the way to $33 and stop at the resistance line, and may even go higher and retest the 2024 height, which was at $35. So this is the bullish sign that we see for silver. So we see two things. Silver could go down because of the head and shoulder pattern, or silver could go up as well. So we'll have to let it play out to see what happened. Thank you for watching.